Good day to you, my trading friends. It is Thursday, December 10th, 2020, and your cherry bomb trade is in today. And if you can see this thumbnail, which hopefully you're looking at this, unless you're driving, hopefully you're just listening. But if you see this word strangle there, I know many of you might be already thinking, this one's not for me. And I don't blame you, because strangles have not been my most favorite trade strategy either. I certainly have been burned quite a bit on it in the past. So I will, of course, take that into consideration. As we look at today's cherry bomb trade, we will consider a few, say with me, alternatives. All right. So MJ, an ETF that tracks the cannabis industry. You get this email from Tom Preston from Tasty Trade today, which more on that in just a moment. And it talks about the fact that it's got 32 or more different stocks or something like that in it. And you know, it's great. I think it's fantastic that you can have all these ETFs. ETFs just seem to be wonderful, right? They let you get the ability to trade, take positions in so many different, sectors or, different products as far as like, metals, and it's great. You have a large menu. So, about MJ, it has a liquidity rank of 4 out of 4, which is phenomenal. We like that, right? It's got an IV rank right now of 42, which is a higher IV than we've been seeing. So let's take it. Highly liquid and high volatility. This is a good recipe for some tasty trading, right? So it also is moderately strong correlation to the S&P, which I'm going to look at my other monitor real fast. Right now, the S&P index is only up half a tenth, so 0.05% right now. Nope, that was gold. Where is it? 0.07% right now. All right. So I can see why I would see it's looking pretty neutral, right? So today's trade is going to be a neutral-ish trade. It's supposed to be. A strangle is supposed to be neutral, right? So why don't we hop on into ThinkOrSwim here, where we do our simulated trading, and get going. But of course, I like to introduce myself. My name is Neil, and this is Option Theory. I want to thank you so much for joining us. Hopefully, I got my mouse to appear right there because I've been dropping the ball there. So this is ThinkOrSwim. You can see we're in simulated trading, and if you didn't know, that's something that's available to you, right? So that's what we do here. We use this simulated trading platform to build out a portfolio where we get to practice our trade mechanics. Now, on this show, we typically do tasty trade mechanics, tasty trade approach, whatever you want to call it. You are certainly welcome to do whatever you'd like, but we invite you to join us so that you can get all the learning with us and without all that risk. And then someday, when you feel comfortable, you can move into doing some real trades for yourself, right? Of course, at your own decisions. Always you're in control, and that's what we want you to know. All right. So I said but earlier, about the emails, you'd learn a little more. Down in the description box will always be a link to Tasty Trade's email sign up page where you can sign up for their various newsletters, one of which is the Cherry Bomb newsletter. And we get those 5 days a week, 4 of which we put on trades from Tasty Trade. And ideally on Mondays, we're going to put on trades that either you guys send me, or if you just send me a ticker symbol and I'll come up with a trade and you guys can compare, hey, well, maybe we were exactly thinking the same or different. It could be fun. All right, that's that. Let's get to building the trade. Now, go into the chart section here. I'm going to type in MJ and hit enter. And there we are. All right, so we saw a down day yesterday, quite a bit of a down day here. And I guess we're looking at this sort of neutral sideways pattern that you can see here, and hopefully going to try to profit off of some neutrality. All right, now that we've seen that, let's take a look at analyzing what they have in the email. So we're going to be in the January monthly expirations. There are no weeklies apparently for this one, which is good. We like highly liquid monthlies, right? So we're looking at a little less than the Tasty Trade ideal 45 days to expiration. And we're going to be looking at selling the 13 put, I believe. Double check. Yep, 13 put and selling the 17 call. Now, if some of you I know do trade inside of an IRA account with their real dollars, and that's awesome, but you can't do this trade, right? pardon me with just one moment. Yeah, so it's always early when I get up and do these, so I sometimes have that little frog in my throat. Okay, so there we are. 13 and 17. We are looking at where's the delta on this one? Giving me the delta. Here we are. No, they didn't give me the overall delta. Well, we're going to see that it is slightly bearish on this one. All right. You can see that because we're over here at a 27 delta on the calls and an 18 delta on the puts. So we would benefit from it going towards the puts. Slightly, of course. In these neutral trades, you tend to benefit slowly over time, unless there's a volatility crush for whatever reason, which tends to happen when things move up, right? All right, now let's go to this risk profile. Oh, by the way, we have one contract of each. Oh, I see what I did wrong. Silly goose. All right, I'm going to left click the bid for the 13. I'm going to hold down the control key for the clicking on the bid on the 17 call. Now I have a strangle. Now I have the negative delta that I was looking for. And we can see that we're collecting a credit of 70 cents. Look at that. See? Sometimes it's so easy to forget the simple mechanics of actually, driving the bus here. Okay, let's click on the risk profile and take a look at our probabilities. Let's stretch out this expected move here like this. And let's set our date to expiration, which is the 16th of January, 2021. And then we should fix that expected move. Still not there. That, and then drag it this. No, wrong way. Silly. There we go. All right. Now let's set our price slices to break even at expiration. And we're looking at a 67 percent probability of profit on this one. So, of course, our break evens are going to be wider. That's nice on a strangle than it would be if we did an iron condor. So some of you might be thinking an iron condor is an option, and I suppose it is. We could examine that. But in this case, what we're looking at is a 67% probability of landing in our break even, within our break evens, and we could collect upwards of $70 for this trade. Now, that comes with what's our maximum loss? Our maximum loss would be, let's see, what's our break even here? $12.30. So $1,230 should this ETF go bankrupt. We get, and it goes to zero. And the scarier part for you and me is what if it should rally? What if some great cannabis news, comes out and the prices skyrocket and whammo, there's no limits to the loss that you could take. So if you are going to try this trade, and I honestly think that if you're paper trading like we are, put the strangle on. Why? Because it's an opportunity to practice mechanics. It's an opportunity to practice what happens if you're tested, right? You may not do a lot of these, but okay, let's say that you do, right? It should be something that's in our toolkit. So set your alerts, right? Set alerts that you're notified when you get the profit or when it moves against you. So now that we have that one, we know our probabilities on this one. What I'm going to do is I'm going to right click this trade. I'm going to choose confirm and send. We're going to review the infinite max loss that we could take here for the whopping $70, although we would look to manage this at 21 days to expiration, or if we hit 50% or $35. I'm going to hit send. That's going to put that in my working orders right here, right? Now, what's a way to protect yourself is to let yourself know when this trade has reached 2 to 3 times loss of the credit received, right? So you could say, let's take a 3 times. That's $210 of loss. So we add 210 to that one, we got 280. So you could go ahead and right click this one and choose create an alert. And we're going to go here and say when the last price is worth 280. Careful so I don't hit the special keys on my keyboard that switch the window that I'm in. And I'm going to say time to close it. So that we know it's time to close this trade, right? So we've set up an alert here so that we'll know if we reach, when this trade was worth $2.80, it's time to get out of that trade, right? So that's how you could help get yourself ready to do that one. If it makes a fast move, right? Or if it moves there slowly, then what can we do? Can we roll up and out if it's going to the call side, or down and out, depending on how quickly it moves. All right, so we covered that one. That's good. Let's switch over to our IRA account and look at some other options in case we want to define our risk. So we're going to go over here to the Analyze once again, click on Add Simulated Trade. And I suppose the first thing that we could do is take a look at doing an iron condor. That seems simple enough, right? So if we click here, we're in the 36 days to expiration again. Let's do the 14, short and long the 13 in this one, and then come up here and do I don't know, let's go 17 and then 18. And so we have the iron condor here. And now we can take a look at this risk profile. So we're going to collect less money for sure, and we're going to have a lower probability of profit for sure. So let's see what we got here. Yeah, so these are not great probabilities. Could we widen it? Yes, but then of course that we're going to get lower credits on this one, right? So let me just move this one up, and we're going to lower the call one. 16, 17, lower the put 12, 13. Let's see what that does for us. So, nope. Yeah, there's no really good way to center this one. So I'm not a big fan of the iron condor in this one. What I am particularly interested in, though, is a butterfly. So I've never really done one. I know that the Tasty Trade tells you broken wing butterflies always over butterflies, but let's take a look at a long call butterfly here. So we would, in this case, we're going to click on this one, sell the 15 call. I want to sell 2 of those. And then what I want to do is sell or buy 14 and buy a 16. I don't want 2 of these. I want 1. Get 1. All right, I think I got that right. For all calls, sell 2 of the 15s. Nope, I want them to be a buy. Sell the 15s, buy the 14, 1. Okay, so I think I got that right. Now we're looking at here a debit of 25 cents, and that's always the attractive thing about the butterflies is they cost so little, right? So if we look here, it is once again a neutral trade, but of course the probabilities are lower. So we're going to set slices to break even at expiration. We're looking at a 20% probability of profit, right? We could only lose 25 bucks, but we have the opportunity of making 75 bucks. So you have a possibility of making slightly more than that Strangle that has infinite risk. And you then have the opportunity to only lose $25 on either side. So I can see why that would be attractive, and it might be fun to play that little game there. Now, what's the other choice that you can make in this one? If you want to be slightly bullish, if you feel that you're bullish on cannabis in this case, what you can do is make this a broken wing butterfly and drop your low one to a $2 wide spread, right? So we're going to do 13 in this case here, all right? So when you take this to a $13 call on the long 13, so what we're looking at here is, of course, we could lose 90 cents. That's defined risk. That feels good, right? And then what we have is a max possible profit of $109, it looks like, okay? And if it blows to the upside, we can still make 10 bucks, right? So what is our probability of profit on this one? We're looking at 63% probability of profit on this one. Another option that you have available to you is try to do a jade lizard, but there doesn't really appear to be one that you can do that has any good probabilities. So I'd like to hear from you guys down below. By the way, this is the one I want to go with. I feel like I'm slightly bullish on cannabis because there's been some good news here in the land of New Jersey. for that stuff. So I'm hoping that this will mean good news for this ETF. So I'm going to right click this trade. I'm going to choose confirm and send. Review that my max loss is no longer infinite in this trade, so it is IRA safe. And we have a max profit of $110. With that, I think I should actually take us over to Tastyworks. And let me just switch over here. Yeah, there we are. So now it looks a little better. Hopefully it's easier to see. Here is the same trade built out in Tastyworks, and you can see that there's in this case, a 59% probability of profit for that trade according to Tastyworks, and then a 72% P50 on that one. So those are some pretty good numbers. Let's head back over here, compare that 59 to what we saw over here. We got 63 according to ThinkOrSwim, right? You see that there. I'm going to hit send because that's going to go into my right here IRA account there. I'm going to hit send. That'll put that working orders in there. And yeah, I don't feel as worried about making any sort of management on this one because going in, I'm already okay with taking a $90 risk on that one. All right. I'd love to hear from you in the comments below. Which of these trades would you find more interesting? Are you excited about the fact that there is an ETF for you to trade? Just always great to hear from you. If you've made it this far into the video, I'm going to give you a big thumbs up. I do appreciate that you watched that. If you feel that I've earned a thumbs up, would you hit that thumbs up? And if you haven't subscribed, we're going to be here for you. But it would be great if you joined us because you can hit that subscribe button and ring that bell, and you can get into the trades when we get into the trades. All right, everybody, until I see you in tomorrow's final cherry bomb trade of the week, happy trading.